JJ the CPA here, getting ready to go over the 60% cliff, but I didn't want you to miss. At the end of this video, I'm gonna run the credits, the music, ask you to subscribe, but then I've got an extra for you. I've got a new friend on YouTube, has his own channel. He's got a little throwdown, little friendly throwdown. His viewer asked him a question and he said, yes, you can include that to achieve PPP forgiveness. And I say, no, you can't. So you wanna see the throwdown? Check it out after the credits, after the music. Here we go. JJ the CPA here. Hey, thanks for tuning in. What are we talking about here? What, a 60% cliff? Are you kidding me? Okay, listen, HR 7010. It's the PPP Flexibility Act. And this is meant to be easier, okay? So let me give you a little history on this. In the CARES Act, the original CARES Act, there is no mention of any requirement for how much has to be used for payroll and a maximum that can be used for non-payroll costs when it comes to the Paycheck Protection Program loan. There's nothing in there. Okay, it was the SBA that came out and had a final interim rule. Okay, and you can see this rule on my community service website, jjthecpahelp.com. I've got an SBA page with all of these interim rules that came out. Take a look at the one that's on April 3rd. Nonetheless, it was the SBA that came out with this rule. So when they did the PPP Flexibility Act, originally, if you look back at the HEROES Act, they were just going to do away with that, okay? But here's what's in the PPP Flexibility Act. The House has passed it, the Senate's passed it, and as of the moment that this is being released, the president's getting ready to sign it. All indicators are it's getting ready to rock. What the PPP Flexibility Act did was alter and add to the CARES Act. It's not a separate standalone act, okay? I've got a different video where I talk through some of the major aspects. I did another video where I did an update where I really walk through the major aspects of this. So I've got links to those two videos here in the body. But what are we talking about on this cliff, okay? So let's pull it up. What the Flexibility Act added, okay, was paragraph 8. And the Flexibility Act made adjustments to section 1106 of the CARES Act. 1106 deals with all the forgiveness aspects of the PPP loan. So what it added here on paragraph 8 is that the borrower shall use at least 60% and may use up to 40%, right? So at least 60% on payroll and may use up to 40% on non-payroll. So when you're reading this, many are interpreting that this is a cliff. Like, what if I don't spend 60%, I'm not going to get loan forgiveness, okay? Well, it is true that it wasn't in the law before, it was by the SBA. But now let's pull up the PPP loan forgiveness application, okay? We know it's an 11-page document. Here's the meat. Here's the final calculation, the one that you would be interested in, the page, because in essence, it's determining what the loan forgiveness amount will be. Now we know throughout all the rest of the pages, we have other calculations that go into this. But now let's go right here and let's just look at this page. And we see here on line 1, we have total payroll costs. Okay, so there's a whole separate calculation, many pages that go into this number, line 1. You can see my other videos that talk about that. But that's the total payroll cost, right? So payroll cost being the employees, the owner employees, if you have a self-employed, that's in that. If, line 31 divided by 52 times 8, for the employees, it would be their health care, it would be the retirement match, it'd be the state unemployment tax, right? That's what that loan, or that's what that line 1 is. It's the payroll cost. It's the whole kit and caboodle payroll cost. That's line 1. Now, interesting, take a look here. We've always had a requirement, okay? This isn't new, okay? The way that it's put in the law is how the SBA wrote it. It's just now going in the law. And when it's going into the law, it's saying 60% and a 40%. So when we're looking at lines 8, 9, and 10, okay, we're calculating amounts to put on those lines. And then on line 11, you put the lesser of those 3 lines for the actual loan forgiveness amount, okay? So let's just focus in on line 10. And this is where it indicates the 75% requirement. Now you'll note what it's saying here, so let's run the math. It's not a typo on that application. It's saying to take line 1 and divide it by 75%. And it says right there, requirement. You divide it by 0.75. Not multiply, divide. So on 50,000, you can see that divided by 75%, then that line item, 10, would be $66,667, right? Well, now let's run the math, though, when that application is going to be updated based on the Flexibility Act here to indicate a requirement of 60%, which you would then take line 1 divided by 0.6, right? Check it out. It leads to $83,333, a much higher amount. So there is a requirement of 60%, but really just like before, in essence, it's just the inverse of what it says in the law now, which is up to 40% can be used for non-payroll costs. So more than 60% can be used, okay? Not more than 40% for non-payroll. But as you can see, when it goes to the 60%, it's a good thing. There is nowhere going to be now a change that indicates that if you didn't meet the 60%, okay, you don't get any loan forgiveness, right? It's always been the case here. So let me just run it. You take that payroll cost, and if it's 0 on line 1, guess what? You're not going to have any loan forgiveness because you're going to have a big fat 0 on line 10, right? Now, if you had 10,000, 25,000, 45,000, 50,000, okay? You're dividing that by the required amount to achieve an inverted number that is then in essence a amount or an amount that you're comparing to lines 8 and 9 to take the lower amount, the lesser amount as your loan forgiveness. So this isn't anything new to me. We've always had this language, and there's always been a concern that it's an all or nothing. It's not, still not. Okay, now here's the deal. It's meant to spend on payroll. You got the loan based on payroll, but what they're realizing is we have so many other issues that are going on. People aren't opening up as soon as they had hoped, that then this Flexibility Act is providing some true flexibility. It's allowing for more of the loan to be forgiven based on a lesser amount of payroll, in essence. Or if you achieve, in this example, 50,000, well, before you would have a max loan forgiveness of 66,667. Under the Flexibility Act, same 50,000, you'd have a max loan forgiveness of a much higher amount, $83,333. I don't see it as a cliff. It's not an all or nothing. It's just a lower threshold that allows you to have an opportunity to have more forgiven, not to mention for the non-owner employees, okay? Outside of the self-employed, you have 24 weeks for your payroll costs to add up. You have 24 weeks for your non-payroll costs to add up. So this is leading not to any negative in my mind. It's only a positive, and you can still call it a cliff if you'd like, but in my mind, all it is allowing more forgiveness. All right, hey, Thank you for watching. I really appreciate it. I'd love it if you'd subscribe to my YouTube channel. Please do. I've got a ton of other playlists. Check them out. Check out the body of this. And then if you've made it to here, I got to guess that you had some value. And if you're not a subscriber, please take a second and click, boom, subscribe. I'd really appreciate it. And then don't you ever forget, you've never met a CPA quite like me. Thanks for sticking around. So got a new friend, Rich Smith. He has his own YouTube channel, Rich Smith, teacher and entrepreneur. He's really skyrocketed in a short period of time. Got some great videos. Okay, I'm going to put a link to the video that I'm getting ready to show you in the body of this, and a link to his channel as well. So check this out. Here's his shout out, and here's his throwdown, friendly throwdown.
Next question comes from Deborah. Deborah asks, can I get home office expenses forgiven? Now the answer is yes, but I want to give a shout out to another YouTuber. His name is JJ the CPA. He is posting videos regularly, multiple times per week, sometimes per day. And like his name sounds like, he's a CPA. Per JJ the CPA, his answer is no. And I'm not trying to confuse you here, because the answer is yes. What I want to say to you is that these expenses should be showing up on your Schedule C already. So if you have a home office, there is something called the home office deduction. And if you have already claimed that on your 2019 taxes, you're going to be able to have that portion prorated over those 8 weeks forgiven. The answer is yes. However, JJ, help us out here. If you're watching this, people need some guidance, and you're a great guy to give that guidance. Also,
all right, hey, thanks, Rich. I appreciate the shout out and the question. The request for additional guidance is here. So what we're talking about here, the question that you heard, is self-employed individual filing a Schedule C. They have a home office. They took it as a deduction in 2019. So can that home office deduction be used as an expense as part of achieving loan forgiveness for PPP purposes? The answer is no. So the first thing to note is that for a self-employed individual, the payroll cost, without exception, is line 31 of Schedule C 2019, the same line 31 that was used to determine the loan. You take that line 31 divided by 52 times 8, that's the maximum loan forgiveness for the payroll cost. Now, for the rest of that loan, you can use it as a self-employed individual for the other qualified expenses, but only qualified expenses. So when we're talking about a home office, okay, home office is got 3 different ways you can achieve the home office. You got a Form 8829, which is the calculation of the home office deduction. You have the indirect method, you have the direct method, and you have a simplified method. A couple of things to note in the direct method and the indirect method. You are able to include utilities and mortgage interest and real estate taxes and insurance and maintenance on your home, and then either direct or indirect, you're doing an allocation based on the square footage of the home office to determine a home office deduction. The simplified method basically takes that home office square footage times 5, and that is your deduction. That deduction is then taken on Schedule C, line 30. You'll see that line 30 is the deduction after the net income that's determined, but before the final net income that is then used for PPP purposes, or even for just the simple net income for Schedule C subject to self-employment tax. What am I saying here? The home office deduction is line 30. It's deducted to arrive at line 31. So yes, you could look at a page, or you could look at a 2019 Schedule C. You're going to see that a home office deduction is there. You could argue that it includes utilities and interest. okay? However, when you look on page 8 and 9 of the SBA guidance that came out on April 14th, which you can get a link to this on my website, jjthecpahelp.com. So you look in that guidance, we're going to look on pages 8 and 9 and 12. So on page 8 and 9, it is breaking down for a self-employed Schedule C filer what qualified expenses they have. It includes that payroll cost, which is line 31 divided by 52 times 8. And then it lays out the exact same type of qualified expenses with a kind of minor couple of exceptions or add-ons there. But it's the rent, it's the utilities, it's the interest. But it does say over and over on page 8 and 9, the business interest, the interest on a business loan, business utilities, business rent. It goes so far as to indicate, for whatever reason, that gas that's used in a vehicle for business use can be included in some of these qualified expenses that are not payroll, that are included for PPP forgiveness. Now, you are going to note that in that section that we're talking about here, I've got a close-up here that it says, you must have claimed or be entitled to claim a deduction for such expenses on the 2019 Form 1040 Schedule C for them to be of permissible use. It does give an example. If you did not or are not entitled to claim utilities on 2019 Schedule C for 2019, you won't be able to claim it. So Rich is saying that someone took a home office, it was on the 2019 tax return, so yes, the home office deduction can be included in the PPP forgiveness. Well, it's just a deduction like any other deduction to arrive at line 31, the net income. So it's a deduction the same as it would be office supplies, the same as it would be, picket insurance, right? Well, clearly in the SBA guidance here on April 14th, there's no indication here that it's any expense that you took on your Schedule C. What it's indicating is it has to be a qualified expense with a caveat is that for a Schedule C filer, it had to have been something that they took as a deduction or were entitled to take as a deduction. But it doesn't mean now that insurance or office supplies is now able to be used for PPP forgiveness. It's saying that if it was on Schedule C and you were entitled to it and it's a qualified, then you can include it. But here's the smoking gun. If you go to page 12 of the SBA guidance on April 14th, you'll see on page 12, and I've got it highlighted here, and what this is talking about is how they're going through and how they're coming up with the fact that it is only going to be a payroll cost of 52 divided by, or line 31 divided by 52 times 8. That's what they're talking about here. But it's indicating this is because many self-employed individuals have few of the overhead expenses that qualify forgiveness under the Act. For example, many such individuals operate out of their homes, vehicles, or sheds, and thus do not incur qualifying mortgage interest, rent, or utility payments. Pretty clear to me that that's not going to somehow backdoor that you're going to be able to include the home office deduction as a qualifying expense for PPP forgiveness. So whether you're using the indirect or the direct method, even if you can show you're using utilities and interest, okay, well, it's not a business utility, it's not a business mortgage interest. It specifically states in page 8 and 9, that it has to be business mortgage interest, business utilities. Taking a business deduction on a personal mortgage, taking a business deduction on a personal utility bill through the home office calculation is not going to now make that a qualifying deduction. Not to mention that the home office deduction includes a bunch of other expenses, indirect or direct, that don't include qualifying expenses. If you use the simplified method, $5 a square foot, well, that includes anything that's qualified there. But I don't believe you can even backdoor any of it, because based on this, it says, because many self-employed individuals have few of the overhead expenses that qualify for forgiveness. And it says, for example, many such individuals operate out of their homes, vehicles, or sheds, and thus do not incur qualifying mortgage interest, rent, or utility payments. As a result, most of their receipts will constitute net income, allowing such a self-employed individual to treat the full amount of PPP loan as net income would result in a windfall. The entire amount of the PPP loan, a maximum of 2.5 times monthly payroll costs, would be forgiven, even though Congress designed this program to limit forgiveness to certain eligible expenses incurred in an 8-week period. Limiting forgiveness to 8 weeks of net profit for the owner's 2019 Form 1040 Schedule C is consistent with the structure of the Act, which provides for loan forgiveness based on 8 weeks of expenditures. The limitation will also help to ensure the finite appropriations are directed toward payroll protection consistent with the Act's central objective. Finally, and now this is going to be changed with the PPP Flexibility Act, but finally 75% of the amount forgiven must be attributable to payroll costs for the reasons specified in the first PPP interim final rule. So I'm not concluding here that the amount that the self-employed individual is getting is all forgivable. My conclusion is that line 31 divided by 52 times 8 is the payroll costs. To achieve additional forgiveness, they're going to have the qualifying expenses, home office not being one of them. All right, hey, thanks, Rich. Have a great day. And then don't you ever forget, you've never met a CPA quite like me.